Welcome, everyone. The goal of this series is to have a conversation with your favorite traders, as well as DeFi analysts. Join me in learning about their journey, talk about trading, and everything related to crypto. So, I have the privilege of having with me someone who's actually become a good friend of mine in the past couple of months, my friend Skew. You might know him as 52kskew on Twitter. What can I say about this guy? He's honestly one of my favorite accounts on Twitter. He provides one of the best updates on the market in real time. Every time there's an interesting move, you best believe Skew is there to cover it in detail. I've personally actually learned a lot over time just through his read on the markets. And without further ado, Skew, how is it going?
Hey man, it's going pretty good. I think we
Glad
are
to have you on here, man. We've been planning this for a while.
kind of yeah, no, we've been playing this for like what a month, and trying to get the right time. It's a bit tricky, different time zones, different
Yeah,
schedules, all
exactly.
that.
Right. And during that time frame, every things have changed a lot as well. But
Yeah,
let's
yeah, the
get into
market
it.
dynamic.
Yeah, the market's just been it's just completely flipped. But yeah, let's get right into it. So I guess the first thing I want to know is the story behind your account name on Twitter. It's a pretty interesting name, and yeah, I'm just interested in knowing like how you came about that name.
The only like influence or inspiration for it really was I used to be kind of like a fanboy of options in 2020 because I thought it was cool, and you could play with like Greeks like gamma, vega, theta, delta, and like what it all meant, like how premiums were created and all that jazz, right? um so around late 2020, so they started to release like higher contracts. So, like a 20K strike, right? I think we broke 20K around the time, so they had to create more. They created like 30K, 40, 50, and like multiple in like the 50, 60K zone. And someone was aping a ton of OI on the 52K thing. And around that time is when we started going parabolic. So I don't know who the buyer is. Some people speculated it was 3AC. No one actually really knows. But nonetheless, that huge buyer was a big buyer of spot too. During the days of the grayscale premium, and
Right.
the carry trade that was on Coinbase and CME. That all these huge factors led to the massive parabolic run.
Right. That's really interesting. Yeah, it's really interesting. I always wanted to know what the reason for I'm always wondering why people pick certain names for their account names. But speaking of account names, why don't we jump into your background before crypto, and how, and then we'll get into how you got introduced to crypto and trading in general.
Fair enough. I mean, to be honest, I've known about crypto for quite a while. Like I used to try doing like the amateur mining using like nice hash when I think I was like 13 or 14. This was like 2012 or 2011, 2012 period. Somewhat there. Obviously, like computer was kind of a piece of shit at the time, so you couldn't really like mine that much. Obviously, your like hash rate was not strong enough, at least. But the difficulty back then was honestly quite competitive, so it's kind of like cool. Um, but before crypto, like what I actually used to do is I was a student, so this is like when I was 18. I'm 25 now, so some context. 18, 19, went to network security school, which is basically where you learn how to be a network engineer, and you have a speciality in network security, which is like cybersecurity. That was a completely different world where you learn about like reverse engineering, the different forms of like malware and all that stuff. And it's actually quite really important to crypto now, considering how big the smart contracts space has become. Like, I mean, shit. Look at the Ethereum like ecosystem's huge, and you have different kinds of smart contract languages. Different protocols like Curve, and in finance we have these huge vaults, right? So security becomes the core principle that a lot of these protocols lack significantly on, which is why you get a bunch of exploits and hacks, because it's like a permission problem, whether you can abuse like spending gas and other features to drain pools, which shouldn't happen, in my opinion.
Yeah, it's really interesting you talking about hacks while we're doing this. We're having this conversation just briefly before this Kyber swap got hacked. So, yeah, your exposure to cybersecurity is really interesting. And what I wanted to ask you was, I have a background in mechanical engineering, so mathematically intense, and that's had some benefits in terms of trading and how I view certain things. So, what I wanted to ask you was, how has your exposure to cybersecurity helped in your trading? Or and also if you have, you're talking about security, if there's any takes you have on when it comes to security related to crypto.
I think I'll start with the security point. So your understanding, or the average investor's understanding of security in this space needs to, I think, be broadened quite a bit. So if you are trading on chain, you need to understand when you're doing swaps, right? And it says to infinitely spend something, which typically relates to like your balance. That's typically a red flag. So once you do the swap, you want to revoke permission. And that's because if that protocol or site gets hacked, that means hackers can drain your entire balance, basically. So that, there's like little niche things that people need to be aware about, and because generally people are not aware, or they simply don't care because of greed, that leads to eventually people getting their wallets drained. So like generally, it's just having more awareness and due diligence to research and understand what you're actually getting involved in, what you're dealing with, right? That should be the foundation, I think, of being involved in crypto, especially on chain. When it comes to handling your own funds, you should always have, I think, at least two hardware wallets, so cold storage. The reason for two is like you have a long-term wallet, right? And that's where you send like Bitcoin or ETH that you buy in increments over time. And if it's a local low and price structure continues to get high, you might as well just um, send it to your cold wallet instead of having it all in your hot wallet, especially on an exchange. I think
Yeah.
those are quite important details. And then the second would be kind of like what you call a semi-hot, which is it's cold storage, right? But you use it more often. So this is like your forefront to mitigate any considerable risks while not exposing your cold wallet all the time to potentially different kinds of attacks against the cold wallet. Because you get different types of malicious bots on, especially, I think, ETH. It'll spam like a cold wallet with a bunch of addresses that mimic the previous addresses that you have transacted with. And the reason why they do that is because the middle section is usually like dot dot dot. It's cut out. That's just for like UI appearance, makes it look cleaner. But this is quite a big hazard because people don't check the addresses they're actually moving their funds to, and that's how people have lost a lot of money to
Right.
little attacks like that.
Right. So yeah, you gave some great tips and reminders for anyone listening in. But there's so many ways that you can get drained. And along the same lines, do you think the securities, is there anything changing in the environment where the average person coming in, if they have to, it's not palpable for them to like even worry about all these things. You know what I'm saying? Like, what the learning curve is really steep when it comes to security and understanding what you're interacting with and doing all that stuff. So do you think in general, like the space is evolving, or do you see any developments, and where do you see we're headed in the future when it comes to security?
I think security is the one thing that's being forgotten constantly. This is why you're still getting people drained. There's still hacks of all sorts, right? Um, Businesses would rather be profitable businesses while knowing their users can lose all their money. They simply don't really care about the end user. That's a fundamental issue of governance and leadership, I think, in this industry. And that definitely needs to be fixed. Like a lot of these DeFi protocols and whatnot, they're quite aware that eventually they're going to get hammered with regulations. And if they
Right.
don't get a move on with things, they will definitely have to shut their doors. And think about all the hacks that's going to be used against them.
Yeah, absolutely. I mean, there's a lot of ammo, right, for
Yeah,
to be used against them. So, yeah. The other thing, so that was a sidebar because you have that background in cybersecurity. So, just want to get your take on that. But also, how has your background in cybersecurity benefited you in trading in general?
I think there are a few other like IT specialists, I'll say, in crypto, and we kind of view the market in a similar way as aspects of like an engine or a jet engine, right? You have like the different components, and that could be for me, all right, the different algorithms that actually price the market, and what mechanisms are we talking about, like liquidity, volume, various different indicators are quite nice to easily see it. Like my screen right now, which is a heat map. You can see these lines on the screen are limit limit orders. Like above the price, that'd be limit asks, and below is limit bids. Right, that is enough for me to like quickly grasp what the liquidity looks like, as well as looking at the order book. So from that, you get quite a clean picture of what the spread is. And by spread, I don't mean like the high frequency trading stuff. I'm broadly talking about um, the range from current price to nearest ask liquidity of sufficient size. Occasionally, you'll get different algorithms that like spoof into price and whatnot and mess with it. That's also kind of important because the more spoofing you get, that lifts price. That's artificially driven. That's increasing risk. So those kinds of niches are quite important to pick up, I think, for lower time frame traders. And I would say some of the skill sets you pick up from my background, at least, or IT, is you have a very like black and white kind of view, in a sense of like I think of um, input outputs or binaries, like one and zero, then that's it, right? So that could be you either have the confirmations, for hire, or you don't. It's like quite as simple as that. And
Yeah,
often that kind of thinking has saved my ass from speculating a little too much.
100%. Yeah, and that's so I have a similar background that's like mathematically intense, and I can say that, I view things pretty similarly in terms of ones and zeros. And yeah, I can agree with you 100%. That saved me a ton of times as well. And so pivoting a little bit, we kind of touched on, how early on you got introduced to crypto and trading. Do you remember exactly like the first time you got exposed to it, or you read about it, or someone told you about crypto or Bitcoin in general?
The first time I heard about crypto in general was Bitcoin, and that was like 2012, and I had some friends who were doing some sizable like mining operations. They were my age, very young, very smart, obviously very rich now too. Um, that was the first time I heard about Bitcoin. I didn't get involved as much as I should have. I was more interested in like other things at the time. But when I actually started trading and investing, so like spot trading is what I started with in 2019. And then I moved quite a sizable portion of that or percentage to BitMEX and started um, trying the different various types of trading strategies, from higher time frame to lower time frame to high leverage scalping. FYI, do not start with high leverage scalping. You will blow up your account, guaranteed.
Yeah, it's a quick way to cleanse your account pretty quickly.
Yeah, it's like 0-day expiration options.
Basically, right.
I mean, if anyone's familiar with Wall Street bets, you already know the like degeneracy there. No different to high leverage trading crypto.
Absolutely.
Right. So duration in 2019 was my like first initial trading year, I would say, and I went through various different strategies. A few indicators that I still use in most strategies nowadays is like RSI, which is just really, really clean for like momentum and confirmations of lower time frame to higher time frame moves. Obviously, the higher time frame is the leading part. And then other ones like Awesome Oscillator, I think it is, which some bigger accounts use for like divergences and the rotational flip in market momentum, which you typically use around like very key high time frame levels. That can be pretty effective. Honest with that one, it became more useful in 2021 till now, but wasn't as useful in 2019, 2020, simply because the volatility and momentum was not like anywhere near the same as I think the past 2-3 years.
Right. Yeah, I know CBS uses Awesome Oscillator and RSI a lot. I personally use RSI with Confluence with Awesome Oscillator on the higher time frame every now and again
Yeah,
as well.
it's really great confluence.
Yeah, it's phenomenal. If you can get confirmation on both when it comes to divs or in general, I think it works out really well. But to take a step back, Skew, how did you go through that process? So, like, when you first started, because a lot of people, they don't know how to move on from something when it's not working. So, like, what was your process like pivoting from your strategies? Like, when one thing wasn't working, what was like your filtering mechanism? You know what I mean? Like, how did you
I feel like
go through that
this
process?
part this part a lot of people get confused with, right? They think a strategy is very easy to apply, and they think the strike rate is going to be, like 90 or 95%, right? It's often not the case. If anything, I would say you're probably doing good if you have a 50 to 60% strike rate initially using any strategy without the context of understanding what the strategy does, what it actually allows you to do. My point here is any trading strategy, for it to be applied correctly, there's a level of expected trading knowledge and understanding of the market. That can be as simple as understanding price reclaims, or flipping a level to resistance. Something very simple as that with RSI confirmations is like basically one of the best near risk-free trades to take.
Yeah, I agree with you 100%. I mean, people look for the most complicated thing and signals and indicators. And I really think there's a lot of elegance and simplicity. Taking the simple things and being able to use them really well can get you pretty far.
Yeah, it can. I think generally people should keep it more simplistic.
Right.
At least from my experience, it's much cleaner that way. To go into the more complicated details and tools and whatnot, like the ones I use, are quite a bit more complicated.
Right, right, right.
They are usually more like directional alpha rather than like confirmation
Hmm.
systematic stuff. But with that, you have to have a very high level understanding
Right.
of auction theory. And
Yes.
I mean,
Yes.
I say auction theory generally meaning, how auctions work,
Right.
and how when an auction is successful, you get exception of one side. That creates um, a flip in the order book. So basically, algorithms are now forced to either cut whatever trade they had previously and take on the new side, which leads to volatility and breakouts, breakdowns, and stuff like that.
Yeah. Yeah. So I mean, there's a few different. I mean, this is a whole tangent conversation, but since we touched on it, we can go into this a little bit. I personally think, I mean, there's a couple of different ways of approaching it, but I personally think when someone's coming into trading, they should learn about supply and demand and like simplified auction market theory, like how an auction works. Maybe they don't have to dig into like how algos work and all of that, right? That gets pretty complicated. But I think the general journey of a trader, and one that I went through as well, is starting off simple, right? And then you start digging into some really complicated things. Like you get to, there's a lot of different avenues you can pursue, right?
Yeah, there's a
Um,
lot.
and then you, like for me, I've dialed it back because I know exactly what I'm looking for. So it's pretty like, I don't need 100 different things. I need a few things that I can look at and make a decision. You know what I mean? And so
Yeah,
I think that's kind of like the general journey of a trader is you start off simple, and then if you can survive that initial period of time, right, and you can preserve your capital, get to a point where you start getting into some more complicated things, and then eventually you kind of divert back to some things that are a little bit more simple.
yeah. Like this side, which is very simple. It just shows the market basically in the form of a 4-hour RSI. Um, yeah, and like generally, it'll show you which assets have, quote unquote, been overbought. That obviously can actually just mean it's strong, right? And assets that are oversold, which could mean they're weak or in like a significant downtrend with context, right? But generally speaking, you can see assets tend to remain in the neutral section.
Right, right. Yeah, I mean that's a whole nother conversation too with RSI and how people utilize it in a trending market versus like it context is what matters there, right? So there's tools that are really
Yes,
simple to use, but you need to understand the or the context of which, they how they need to be used in. And so I think that's
exactly.
where a lot of people, kind of don't really grasp that concept.
Yeah, they don't. I mean, I understand people have seen a lot of big accounts make a lot of money, big P&Ls and all that. And like they're, obviously inspired to a point to achieve the same level of success. But people need to obviously take into account the time it takes. It's at least a year or two. And
Yeah.
even then, that's for like quite um, sophisticated traders, I would say.
Yeah, I agree with you 100%. I think I was reading an interview from CBS, and it took him like 18 months to develop kind of his strategy around awesome oscillator and RSI. But like you said, it needs, yeah, if you're a sophisticated trader, it might take you, 12 to 24 months. It could take longer for you to really dial
Yeah,
down.
definitely.
And also, it's also dependent upon your psychology, the way you think. It's individualistic. Like you might be a better swing trader
Psychology is a
versus a
big
scalper. Yeah, sorry, go ahead.
psychology is a big portion of risk taking and knowing when not to take the risk. Understanding, what is risk, what is reward, what is the dynamic between risk and reward. That that level of thinking will allow you to take the right setups rather than just speculating because some account on Twitter said it was a long or a short, right? I think it's quite basic to have like a set of principles and rules, which is part of your trade plan. So like for me, some of the very basic ones to like take along, for example, would be something more systematic, which is like like this price area, right? You have a 1-day EMA, and you also have the 200 4-hour EMA, as well as the market being quite oversold. And then the after portion of this would be more auction theory stuff, and that's where you get into like the order flow stuff. So I don't know. I think it'll show it on here. It's like, yeah, it shows it, but on lower time frame, you would see the order book basically flips from being supply to demand. And that is one of the other more complex confirmations I use for when direction's about to change. That's very important, and it's the same with this high here. It's just very simple, but when you put it into a trading strategy, it's quite useful.
Absolutely, 100%. I mean, I use the same. I think that's really beneficial. If someone's a beginner, I think, just kind of building it up to the point where you can start understanding how to read this and how to apply it to your trading, I think would be really useful.
Yeah, for sure. I need to. I've been delaying it for quite a long time. Just haven't had the time, but I need to actually do more in depth, like write ups about this kind of stuff,
Yeah, I
trading
think
niches with strategies and market data and how to use it, when not to use it. Like I think these tools can become a bit noisy when you have considerable
yes,
consolidations, because you don't always have like accurate signals from the market, and that's simply
right,
because you have like too large. It could be two desks, playing chicken with one another until the other
right,
does something stupid.
exactly. Yeah, and that's why there's so much noise at times. And like you said, it can get
Mm.
misleading if you don't. Again, it comes back to context. You need to know how to use the tools in a certain framework and understand how to filter out that noise. But yeah, you
Yeah,
definitely need to
exactly.
put together that guide. And I remember reaching out to you about that too, because I've learned a lot from you, to be honest, just from your how you present information. I just have kind of taken some nuggets from your read and kind of deciphered it and looked into some things for my own strategies. But I think that would be extremely useful once you get around to putting out that guide. But we were talking about psychology, and I think one thing a lot of people would be interested in knowing is, what do you think are your strengths? I mean, we talked about the ones and the way you view the market, but what do you think are your strengths in general, and perhaps something that you've struggled with the most throughout your trading journey?
I think my strengths would primarily be understanding the market to a higher level than most. Like that kind of gives me somewhat of a very lower time edge against the larger portion of the retail market. It kind of allows me to be able to play chicken with some bigger individuals and potentially force them to cut their trades or take the other side, which is part of the like 4D chess we play in crypto. I think like my limitations is probably the probably limiting out more noise from my own signals, because I am more lower time frame. So like specifically this year, right? There's been numerous signals where the market should have moved, on lower time frame, but didn't. It didn't have sizable people to move price, and that's simply because they understand that the risk here is actually not great. That could be as simple as order book depth being against the market trade, right? And that's where you get to points of early distribution or early accumulation. Like 25K, for example. We could have easily nuked to like 23, 20K. A lot of people were looking at it, myself included, but we never did. We never did,
Right.
and couldn't actually push through that level because obviously it was a bigger, much bigger market entity or player
Hmm.
who was continuously buying.
Right, and we can speculate on who that entity was, but yeah, no, you bring about a great point in terms of being able to eliminate the noise, and I think that's a skill
Yeah,
in
yeah,
of itself, especially in this market.
yeah,
But
yeah, for sure. I think the recommendation I would make is if you make like numerous bad trades, right, or even like two. To be honest, I would probably look at different assets because there are the same setups across the entire market, right? It's hundreds of coins. Um, Liquidity is a big thing, though. That's a big part of like my risk profile in what I trade. If the liquidity is trash, I will reduce my size significantly. A lot of people don't, and they end up blowing out the spread a lot. And obviously, they close at a loss because they get filled like 1 or 2% higher or lower than price.
yeah, yeah, I think liquidity is really important to understand too. And so that brings me to another point too: is what assets do you typically trade? There's this conversation around being a specialist on one or two assets or majors versus trading any ticker. Um, having a nuanced understanding of an asset that's being traded versus someone who doesn't care and just trades a ticker and sees setup on a chart. Doesn't really care what the ticker is. Do you think it's better to be one or the other, or is that's also like individualistic when it comes to someone who's trading?
I think it depends on like what sector it is. Um, and are they outperforming or underperforming the market? What do the charts look like? What kind of setups are there? The systematic approach that I use, like 4 hour, 1 day, 1 week EMAs, MAs, makes it very clean for me to have a look at leaders and in individual sectors, and then being able to take on the risk where I see it recently. So like some of the AI stuff, Sol, FTM, Matic, like those general ones are the ones I usually trade. I like to stay towards the bigger market caps because liquidity, right? However, every like few months or so, when I see the market is at a point of rotation, so like very early stages of rotation is typically when I start looking at a lot of like shit coins. And yeah, I will ape a few, not gonna lie, because it pays off well and it's like an easy trade over the next few days. I don't typically like hold them unless it's a high time frame play, like a lot of the AI coins at the moment, the kind of higher time frame trades.
Yeah, so you bring up shitcoins, and there's different tiers of shitcoins, right? So, by the way,
Yeah,
do you trade on chain at all, or like do you trade like actual shitcoins at all, or there's a limit to how degenerate you're willing to go when you're trading?
there's definitely a limit. I like to keep my profits. I don't like to give it away that much. That's why I usually take profit pretty early, especially if it's a lower time frame play. Um, that's just generally because I use like higher leverage than most people would.
Right.
Um,
What would you say?
but
What's
if I'm
like your
using like lower
average?
leverage, my average leverage,
Yeah. Yeah.
like 20x probably. Most often I use like 40 to 50.
I see.
It's kind of degenerate, but it's how I trade.
I mean, yeah, if that's your, I mean, it's different for different people. I wouldn't tell someone who's just starting to trade to go use 20, 30x
Oh
leverage. That's a quick
no, no,
way
no.
to cleanse your account. You need to build up to that. Obviously, you've been doing it for a while. You know what you're looking for.
Yeah,
what you're looking for
you
and
got to
what you're doing.
be
So,
very very alert of what's going on, especially when you're trading like size and that amount of leverage. You actually become a target most often.
Right. Exactly. Yeah, there's that too.
Like I think Loma has talked about this a few times. Is like he would take a position on some alt and then like
Yeah.
redacted desk. We all know who it is. Would target their positions.
Yep.
For Unchained though, you asked me that. I do a little bit, but
Okay.
I don't tweet it, and that's mainly because if I did,
Yeah, it
I'd
would
take
be
on that risk because I would move the asset a lot.
yes,
Like
yes.
I know a lot of other bigger accounts that may do it. I think
Yeah.
it's that kind of issue to deal with in the future, but I will not do that.
Yeah, I mean that's a whole different conversation as well in terms of people, that's entire part of our space that, I wouldn't say I'm extremely fond of, but again, there's we're in this space for a reason, right? It provides us with the volatility, with the inefficiencies that can be taken advantage of.
Oh yeah, we're in the right
Right?
market for
Exactly.
infinite arbitrage, whether
Exactly.
that's funding related or just simple carry trades or um, different currencies and whatnot. Like one that's been taken advantage of, I think, recently by not many people at all. Like very few people can do it with the jurisdiction rights and all that. Is um, arbing Bitcoin in Asia. There's a lot of legality issues, but there's been like a 20% at least premium when you swap it back to like stablecoins.
Interesting. I mean, that's pretty
Usually
significant.
even higher because of the conversion
Yeah.
rate.
Right. Yeah, that's pretty significant. But the other thing I wanted to ask you was, I mean, we were talking about your trading and how you trade on really pretty low time frames. What would you say is like your average holding time for a position? I know I think the Flow Horse posted something about his most
Depends
profitable
on
trades
market
are.
momentum.
Yeah, exactly. I know he
That's
posted
pretty much
something. It
it.
was like 15 seconds, like where his most profitable trades, at least when there was chop, which makes sense, right? Um, but yeah, yeah, like you said, it depends on the market and the momentum.
Yeah, it highly depends on the market. You can have a great setup, all the confirmations, but the market won't move.
Yeah,
Then, yeah,
100%.
obviously you have the option of where's your invalidation, right? And if the market gets heavy, but you still want to take on that risk because you think it's good, then obviously tighten your risk. Otherwise, you have to babysit the position.
Yeah,
And one way to do that is not taking on big size initially, scaling your position with the market as it moves, and then basically getting out. Getting out is the hardest part with those ones if you're chasing moves actively.
yeah. And then like in terms of risk management, a lot of people manage it differently. I mean, some people are going to exit um, with a discretionary kind of strategy, right? And some will have hard stops. Like, how do you manage that, or is that just also dependent on the kind of position you're taking?
I usually have hard stops, so if I'm trading like 50x, it'd be like 10% risk, basically. So my hard stop would be like 10%. I'd also be targeting like a 1 or 2K move on like Bitcoin, and that's a considerable ROI, so it's kind of
Yeah.
worth the risk. Then often I use a different like book that may have a slightly higher price, like a DEX, and then I can use that to take advantage of a few market inefficiencies, right? To essentially hedge like a long that I would have open.
Yeah, that makes sense. And
Yeah.
also, in terms of your trading, I mean, if anyone follows you on Twitter, they know the platforms you use. But if you want to briefly go over what indicators you're fond of and what tools and platforms you use in general.
I think generally for systematic trading, I use EMAs, MAs, right? I have my own one, which I need to make like a thing so I can release it on TradingView. Kind of annoying, but I will do it. RSI is a big one. I can show you my thing here. RSI, stochastic RSI. And then I just use like, 4-day, 1 week EMAs. Sometimes reversion bands are really, really nice for like how Bitcoin is trending now. Like Cuban makes a nice one. You can, obviously change the settings. Like I made this basically, and it makes it kind of easy to trend with the market while also knowing where to take off and take on risks as like a scalp trader. It seems to work still after like 4 years. Kind of interesting. For like Orderflow stuff, I obviously make a few of these. This one's free. There is an ETH one that's free too on kingfisher.io. I think we have a few domains of the sort. Yeah, but basically this is just like there to briefly show you what take is, as in orders that execute at market price, right? They don't have to wait for a fill like limit. It's instant, right? I use this a lot for gauging market momentum. You need takers for there to be any momentum, really. Like as you can see, this like drop is all takers, people selling at market price. And then same here, like this candle here, same thing. You need that level of indication of what the market's actually doing under price. If it isn't like all the time leading, it often indicates what will happen next or what is happening currently, and that those few seconds or even minutes of context can actually save you money, especially with managing risk.
Yeah, that's a great point. I think that's what flow gets you to, right? It's information in real time versus with technical analysis, it's kind of you're using historical data to predict the future. And
yeah,
it can work. I mean, there are, but I really do think if you can combine flow, it really gives you, it levels you up quite a bit, especially in this type of market.
You real context.
Right, exactly.
Like you can be great at price action, right? Reading price action and structure. But also like exhaustion divergences and RSI is like one of the kind of trappy things that has gotten, I think, a lot of people blown out. If it's not supported by market flow, the divergence is likely invalid.
Exactly. Yeah.
That's kind of like a market edge right there.
Yeah, 100%.
Yeah, then other than that, I use Velo data. I use Tensor Charts. Tensor Charts is free, so that's why I tweet about it a lot. So people can easily get situated into like what liquidity is and like how to use heat map sites. I think other sites like this one, which is more paid now. This is more paid, so this is like real-time order book data. You have to pay for all the Binance, I think, now, but it's pretty good. It's really nice to use. Another one is Trading Light, which is basically Tensor Charts, but just better.
Yeah, that's what I use.
Yeah, a lot of people use that. I use Lat. I can't pronounce the name, but I use this one for looking at derivatives data. Can be pretty
Levitas?
nice.
Yeah. So I've used that. I use that as well.
Yeah, it's quite nice because you can go to like perps and then see like what the OI is, the difference in OI and 24-hour volume. You can also have a look at like the APR, which is quite handy for like carry trades, as in using futures to hedge your spot bag. Quite handy. Another one that is more free and similar to a few sites combined is CoinGlass. So they obviously have funding rates.
Yeah, CoinGlass is so good.
Yeah, it's great. I've been
data it
using
has on
them
there is
for
phenomenal.
like a year. They're great. They have a lot of data, like a lot. Yeah, it's kind of crazy. And they also on the front page, on the homepage, they have. Wait, maybe it's if I go to here. Yeah, here it is. So a lot of people, a lot of sites, I mean, are using open interest divided by the 24-hour volume. And that gives you a really nice perspective of how much OI is actually moving price.
Yes.
That's important because a lot of the shit coins that are moved by OI,
Yeah.
like,
Yep.
Specific, I wouldn't even call them MMs. They're like predatory long short funds kind of. They will use OI to move shitcoins. What the heck? Oh, it's the futures. Never mind.
Yeah, that
That's
OI divided by
fine.
volume is really nice, actually. Kind of gives you like an apples to apples comparison. I think it's really useful.
Yeah, it is. They used to have it here. Ah, sick. Okay, I can actually add it. Bro, wait. Remove that. Should be able to see it now. Yeah. So this will be by the entire market. FTT. It's mostly OI driven.
Yeah. Yep.
And whatever this shitcoin is.
AI Doge.
Like you can see a bunch of them. Usually when it's above like 2 is when
Wi-Fi
it's
still up there.
very artificially driven.
What's going on with Wi-Fi? Oh, that was a whole thing too. Get into that. Yeah, but CoinGlass is phenomenal. It gives you more information that you probably know what to do with, but I think you can get to a lot of interesting data on there.
That's great. Yeah, it's really good. The competition now with like data analytics in the space has gotten really nice.
Yeah, do you know about this other platform? I believe it's called Santiment, and it's mostly like social metrics and data
Sentiment.
analysis.
I've looked at it a few times. It's useful during, I think, probably like very frothy markets,
Right.
but not when the market's like kind of dead.
Yeah, I agree. Validate is pretty
I use
nice.
Velo a lot as well. This is what I usually use for looking at OI, funding rates, spot delta, and the perp delta as well. I use this like all the time for looking at the market.
Yeah, really clean.
They also have like futures, which is really nice. Funding rate, liquidations, annualized basis. Basis is pretty important for term structure trading. And obviously the average return by hour can be useful for a lot of statistic-based trading. So like in the past 1 month, this used to be Tuesday used to be like a big day. It's now become Wednesday, and a lot of the moves have still been Sunday to like Wednesday period.
Right.
Yeah, which is kind of interesting, to be honest.
That is pretty interesting.
Yeah, and where I think a lot of people have been asking about this recently is where I get CME data
The CME
from.
data, yeah.
It's Velo. You can also get it on here, I think. Yeah, this is the CME OI, and then this would be the reports, like basically the change between the different categories that make up the open interest. And the respected percentage. Also, the dealers and asset managers, like these three, are quite important for like how much OI changes at CME, and specifically the dealers, how it impacts Coinbase, so the spot market. So yeah, by the looks of it, dealers would probably have to buy a lot of spot above like 38K by the looks of it here.
Yeah, that's definitely what it's looking like.
What other sites do I use? I use CoinGecko occasionally, obviously, for looking at the market.
Yeah, it's
We're
a
looking
really
at different assets.
yeah. That's CoinGecko's pretty good.
Yeah, another one you can use. I have this bookmark for a while now. Is Crypto Slate.
Oh, interesting. I haven't seen that one before.
Yeah, it's similar to like CoinGecko, but you can obviously search by sectors.
Oh, that's interesting. Yeah, that's useful actually. It's good to know.
Yeah, yeah, it's really good. So then you can make more sector based trades.
Interesting, because I've been thinking about making a watch list on TV by sectors, right? So this is helpful because I mean I have
Yeah, they do it for you,
yeah, it's
basically.
really good.
Blockchains as
Yeah,
well.
it's pretty useful.
What the heck is NEM? Beer
You're
money.
asking
What
the
is this
wrong
shit?
person, man. What the hell?
This market is
Yeah, it's something else. It's something else, man. Let me tell you. That's interesting. All right, so um is there any other to use? I mean, I use Coinalyze here and there, but I mean Velo is kind of basically I think it's cleaner um in terms of the
Velo.
UI.
The UI is
UI is so
cleaner.
nice. Yeah.
If I want to like roughly explain some predatory move in some shit coin, I will use Coin Analyze.
Right,
I just
right.
find it like easy to quickly make it up in like a blank sandbox environment, so to speak. And that's simply because I don't want to have to go through Velo, and I don't want to like change my current template at all.
You have to set up the yeah, exactly. No, that makes sense.
I don't want to change that.
Yeah. Yeah. No, they have a clean UI. All right, so we've kind of
Yeah,
shared.
it's nice.
Yeah, go ahead.
I was saying it's nice to just have this, like ready to use whenever, easy.
100%. So yeah, we're going through your kind of the platforms and tools you use, and there's like the cliche question of how many, what your screen setup looks like and how many monitors you use. What does that look like for you?
I would, so for me, right, I just have a big 49-inch screen, which is basically like two 27-inch monitors, right? So the monitor's split in two. So I'd have like my charts here, whether that's, this or this, and then I would have like Twitter and my exchanges on the left side of my screen. And then I would also I can like move my browser to like half of the other screen, and then I can have my other in-house tools for like limit chasing and stuff. But I think generally 2 monitors is probably best for most traders. Being able to see the market live on one screen and then executing on the other is like quite nice, rather than like trying to find the tab and stuff when there's volatility.
Yeah, I agree with that. I think two is sufficient. I mean, I have so I have two widescreens stacked on top of each other, and then I have a vertical on the side, but that's mostly for reading documents and stuff. I'm not really actively using it for trading.
Oh yeah, that makes sense. I used to
Yeah,
have like 3 separate monitors, and then I would have the vertical one, which was like my right, the third one. I
right.
would use that for reading tape. And that
Yeah,
that was
yeah, yeah.
when
So that's what I use
the
it for as
market
well.
was like sufficiently volatile, and you had
Right,
like nice trends.
right. But yeah, I agree with you. I think two is more than enough. You don't need to have like that entire, those crazy setups that I see sometimes. think it's kind of weighs you down. It's too much. You don't want too much information to be bombarded at
Yeah,
you
you don't want
five
too
different directions.
much information input where it actually ruins trades. Because if you have too much going on, you don't know how to process it all. It'll skew your risk taking a lot, and you'll probably go against like your trade rules.
Yeah, I think it would just cloud your decision making skills. So, I agree with that 100%. And then along the same lines, what qualities do you think are necessary or key for a trader to be successful in the long run?
Like individual qualities.
Yes, individual qualities. Yeah.
I've thought about this quite a bit, and have you ever noticed the amount of pro poker players, specifically in this industry, right? There's a lot. And the reason why for that is they understand game theory. Game theory is hugely important in long term positions. And that would be like GCR, who took massive shorts on Luna because he knew long term they could not support the peg, right?
Right.
So at the time, that seemed like a high risk play, right? And yeah, technically it would be against if the market went against you, right? That's part of the game theory. However, it's more probable, and this is where the statistics and probability comes into. You need to understand probability a lot and very well, and how to use statistics and probability in like your trade plan or general trading to minimize or have minimal drawdowns while maximizing how much profit you actually cumulatively have, right? That's hugely important. So simply market psychology, game theory, understanding, and I think a very robust trading system, whatever that might be, and two kinds of trading plans. So a more adaptable one for trending markets. So that's when like mean reversions don't work as well. You need to know when to stop using those, and also when to apply the mean reversion strategies, which is when you have more compressed markets. And that again goes into understanding the market as a whole, like meaning the two different market types, trending markets to consolidation.
Yeah, I mean, you brought up some phenomenal points. And I think I mean, you tell me what you think about this, but I think being able to have a Bayesian framework where you're constantly assigning probabilities to things in the market. And then also, I think especially for beginners as well, journaling is really important in order to go back and
Yeah,
see.
I would recommend
I think
journaling.
that's really
Like
important
the
as
first
well.
year as well, it's going to help you um, make things not blurry. That would mean clearly documenting what doesn't work with certain strategies, what kind of market conditions got you wrecked or affected your emotions a lot. And the emotion part is going to be very, very, very important for the overall bigger trends. Because when you go into a bull market, people 100% lose focus on all kinds of things a part of their trading rules, like they take on way too much risk, they chase the market too much, and eventually they get wrecked. And you don't want to do that.
Yeah. And that's typically what happens towards the end is that euphoria that comes into play where people lever up even more with time. And what they're failing to recognize is towards the end, when you're levering up more, you're actually at the risk to reward ratios plummeting towards the end of a cycle. Um, I guess that's how cycles work, anyways. Self fulfilling mechanisms. I think the uh, these steps that are taken over the course of a cycle essentially create the tops and the bottoms long before we get to those
Kind of
points.
true, yeah.
But yeah, so this is actually also a very interesting conversation. Let's change gears a bit. Like, I'd like to get your take in a more macro sense. So, ever since the FTX debacle and everything that happened there, have you observed? I mean, this is a we've seen how Bitcoin has changed in the way it behaves and trades, and also before FTX collapsed, there was a pretty strong correlation between Bitcoin and TradFi, SPY in general. Do you think there's more to that than it just being an artifact of where we are in the cycle, or is there something more to it in terms of market making?
I would say all of the above. To break that down, right? The reason why we had strong correlation to TradFi, and specifically this would be because of two things: monetary policy and fiscal policy, right? And we saw the two huge shifts in that. That was 2020. Was obviously the easing and whatnot. This lifts commodities initially, and then you get the big speculative bubble, which is where everything goes up, right? That creates different kinds of impacts economically, like the wealth effect, which obviously would mean like everything, like Rolexes to houses to cars, go up a lot. But understanding it's never sustainable for that long is the key detail, and that's when you understand you need to be more like protective of your capital. So that would have been like late 2021, early 2022, when central banks were changing their monetary policy to tightening, right? That's where the correlation kicked in, like big time. And you were seeing massive funds de-risking completely, and that would lead to somewhat like capitulation candles, but over and over and over. And that's because the market grew substantially during 2020 to 2021. Everyone wanted a bit of the cake, or even more chunk of the cake. They would literally fight for it. And obviously in the market downturns that happen with every single cycle, I'd say majority of the market gets blown up in some form, right? So kind of important for the market now, since the recovery has taken a lot longer than most expected, right? And probably still will. But that being said, when markets like crypto get moving, it's obviously far more than what they expect. For 2023, what I've seen mostly is the correlation's not sufficiently one-to-one. It'll be there some days, and most days that's usually around bond auctions. You'll get like a puke before the bond auction, then it'll bounce after the bond auction. That's usually like 10-year, 20-year, 30-year, whether that's your notes or bonds. Same strategy applies. Loosely, there's been a nice correlation to gold in terms of macro for like past 2 years. Gold usually leads, and then Bitcoin catches up eventually, but there's still quite a discretionary gap there. Other than that, I'd say like an underlying correlation that's always around is the conversion of how strong is cash as in USD. That definitely has an influence over
Yeah,
Bitcoin's strength, I think. Strength and weakness directly.
one hundred
You
percent.
can obviously track that using the Euro USD pair.
Yeah, so this leads me to another, like, I want to just delve into this really quickly. Um, a lot of people that are trading crypto, what do you think the value is in understanding these correlations in terms of like how everything ties in with Dixie, gold, oil, equities, what's going on globally, um, and also in the US, what the feds are doing? How would you suggest someone go about even trying to understand all of that? Because I think a lot of people shy away from that because it's work, right? You need to do the work to understand how everything ties in. But I guess what would your suggestion be?
Kinda. Yeah, I guess I would make it simple. So you have the gigachads at the Federal Reserve and other central banks. They are literally the market overlords of both, bonds, currency market, especially the debt market. And debt market eventually impacts equities. So like a meme thing that has been going around for ages is like equities overvalue, right? There's some aspect of it that can be used later on. That's usually when you have cycles that blow up, and that's when you have central banks that realize debt, as in capitulating on debt. That has not happened yet. I think like next year will be very important for that part. But generally understanding when central banks are easing, that means net liquidity increases in markets globally. That's very bullish for crypto. And when net liquidity is overall decreasing over time, and you have QT, which is quantitative tightening, that can be like the form of issuance, like we have now, to essentially fund huge deficits, as well as tightening conditions. I would broadly say tightening conditions are very important because it makes it expensive to finance or refinance or borrow. Understanding generally that monetary policy stance is what really drives the initial correlations. Like, you don't need to track the correlation between ES and Bitcoin like every single day. It's been on and off this entire year. Most of the time, Bitcoin's been uncorrelated. Every now and then, something will happen, like some kind of whoops, shit hits the fan for like a moment. Then obviously,
Right.
overlords have to backstop it before the entire system collapses,
Yeah.
which they will do. That's usually when the correlation's tight, when like shit hits the fan for something, and then they obviously fix it, and then that's like the
Right.
next trade.
Yeah. Yeah. So speaking of overlords, we know there's institutional flow coming in. How do you think how that's going to impact trading or crypto in general in the future? And do you think, in your opinion, the impact's going to be gradual or it's going to be rapid? And there's a lot of speculation around that. Obviously, no one knows for sure, but it's an
I
interesting
think a bit of both,
conversation
to
to
be
have.
honest.
Sorry, go ahead.
You're going to get the few firms and funds that are greedy. They want the most market share initially, which means they're going to be premature to make these decisions. Like a good example is 3SC, right? They were earlier than most people, and they still blow up. Like, as soon as the market went against them, they blew up because obviously they were being stupid. I would expect that to probably happen again the next cycle with some bigger group. And that's just obviously risk taking, all that blah 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 stuff. For like exchange flow, institutional flow, I think CME is massive at the moment. They're bigger than Binance. A lot of that has to do with the regulatory stuff and their case and all that, which has restricted a lot of big firms that used to trade on them, which have gone to other firms, other exchanges, or CME themselves. I think the Coinbase trading, the new platform that they have, futures, will be pretty important to watch. I know it's really illiquid at the moment, but the moment they actually get some good MMs to provide liquidity there, I think it's going to attract a lot of their institutional clients, which are already there at Coinbase. And they do some pretty big volume as well. Yeah, I would say probably the relationship between CME and Coinbase is definitely one to watch in NA. Internationally, I think it's probably exchanges that have two kinds of products. So that would be centralized exchange, so like Bybit and The DEX, which is Apex, I think. Another which has been in some like drama lately is probably Woo. They have a CX and they also have a DEX. So these kinds of businesses, I think, are well situated for the next cycle in the market, where you're going to have two different market fronts that are correlated, because of their centralized part. But they also allow you to like trade sort of off centralized books. I think eventually regulation will probably force the two to separate, or force the two to comply in some accounting rules. Compliance, basically.
Yeah, so you covered a lot there, and I think since we're on the subject, like in terms of dexes and kexes, and there's a narrative of dexes that are offering perps trading. Do you have any insight on, what the issues are around that? I mean, there's obviously the regulatory aspect, and aside from that, from a user perspective, what do you think the issues are? I mean, there's liquidity. There's a lot of other. I mean, we've seen a lot of issues
There's a few
just recently. Yeah.
main points or semi issues that they have, and that's sufficient liquidity, being able to handle a lot of volatility without their exchanges going down or breaking. Somehow Coinbase still fucks that one up. I don't know how. Kind of funny, honestly. Other than that, the infrastructure is extremely important. So that would be, like the UI, the UX experience. So the user experience is very, very important. So that would be further improving products, so they can actually survive. And that's pretty much what I would say was the like BitMEX versus Bybit kind of competition in 2019. And the reason why Bybit blew up, as in not blowing up, as in gained a lot of traction. That's what I meant. They're like the second, or one of the biggest exchanges globally now. Massive. They benefited a lot from the BitMEX situation. And obviously it's a bit different now because of KYC rules, right? So that begs the question: is how much do DEXs, in terms of inflow, get between now and the future? And that could be more of a long. I think it's more of a long term than short term thing, where more and more people go to DEXs because they become anti government or anti, like, I would say it becomes more of a problem because of like scrutinized regulation. And that creates all sorts of issues for exchanges that impacts their business. It creates more risks. That's why a lot of people didn't use Binance this year, just in case something went wrong and they couldn't withdraw because of the PTSD, more or less, created by the FTX debacle. I think the key point of that basically is exchanges need to report what their desks, like the revenue that their desks basically make every quarter. I think that's important, which is similar to what reporting rules are done at CME, the dealers, basically.
Yeah, and we're talking about regulation, and there's another speculative conversation that I'd like to get your take on, if you have one, is CBDCs. There's a whole narrative of, okay, well, this might be the last
Yes.
cycle, and onboarding and offboarding, and like the fact that there's only really Coinbase, in terms of being an on ramp and off ramp. Sorry. And so, what's your take on that?
I think it's going to be more complicated than straightforward.
Yeah.
I wouldn't be surprised to see initial development of centralized bank digital something, right, which is more in the form of digitalizing their treasury market. That would be the first step. That would be like better clearinghouses, better risk management, security, and whatnot. That would have actually prevented the disruption in the treasury market created by the hack in China recently. That's why like one of the auctions was like horrendous, and that like spiked yields, so probably blew out some people. Um, in terms of like currencies, most of the infrastructure is already somewhat digitalized at banks in terms of like near instant transactions between bank clients to same bank clients and bank. Like here in Australia, it's all digital. Um, that's definitely going to be the norm, I think. And in some form, I wouldn't be surprised to see like Tether or Circle being involved in potentially the foundation of like an actual centralized USD, as in they become market counterparties to like a future forex repo or something like that. Given this is all speculation, we have no freaking idea how they're going to do it.
Yeah, exactly. I mean, it's all shooting darts, at a board, but it's still interesting to have these conversations sometimes, just to think about through some frameworks in terms of how things can end up. Um,
Yeah,
but
I think people generally don't understand how complex the
right,
financial system actually is,
right,
how like not robust it's become over the past like 10 years.
yeah,
There's
yeah,
too much going on and they need to refine it, and refining that is making things more digital.
right.
So like DeFi in some form gets put into treasury markets. Wouldn't be surprised.
Yeah, I agree with that. And
It would also mean they have to really regulate stablecoins
yeah,
in like the next year or two if they want to do that.
right. Yeah, I mean, I've seen a lot. I mean, on Twitter currently, there's all this talk of this is the last cycle. This is the last cycle. You know what I mean? This is the last run. This is the
Oh,
last
yeah,
run.
dude, it happens like every single cycle, and then it happens again, and then
Yeah,
people
exactly,
get
exactly.
stupid. And
Yeah,
yeah,
but again, like this is like throwing darts in the dark kind of thing. But it's interesting to have these conversations just to kind of lay out some frameworks of where things can potentially head. Um, One last thing, actually, this is a bigger conversation as well, but I want to get your take on. So Ray Dalio has a great book by the name of Changing World Order, and in that book, he basically
yes.
dissects the common thread between the ascension and collapse of empires, his macro cycles, and discusses the shift in wealth and power. And the big cycle of all empires tend to follow the same trend because of aggregate human behavior. And one of the phases I believe is inevitable is a collapse of the reserve currency of an empire. And we have the China versus US thing. I mean, a couple of months ago, the dynamics were different. Recently, there's some shift in what's going on, um, at least on the end of China. They've come out with a really friendly posture. But what is your take on the macro environment, generally, like globally speaking, and where do you think things are headed globally in the near future and distant future?
I mean, I'm young, right? So a bit of a grain of salt with this one, but I think we've over the past like 40 odd years, it's been very innovative to the point we've kind of hit like a hard ceiling, especially fiscally. And this has created like enormous deficits. And eventually, especially for the US, they're going to have to realize that in some way. And one way to potentially clear that out with like minimal damage is bringing in some kind of new currency, right? That would be part of how they can do it, because then they can like wipe out the tangible issues and all that. That will obviously be copied by everyone. So we could legit skip like a catastrophe that is similar to the 30s depression, 1930s depression, that is. Um, yeah, I think next year is going to be a significant year for the fiscal problems the US has, and as well as the general health and stability of China's domestic economy. They have some serious issues going on there, and that's why you've seen posture changing even like the Europeans, some of them went against the sanctions with Russia, and they started trading, with Russia, and that's because you now have a shift from the moronic left-wing politics to more nationalistic focus, which is how do we build our economy up? How do we fix our labor market? How do we fix our cities, most importantly, and our countries? Otherwise, they all face eventually going to shit, just a matter of time, right?
Yeah, yeah, exactly.
Yes, speaking on this, you should have a look at the Dutch election. So the far right in a very left-wing country has the power now. That's a dramatic shift in
Yeah, absolutely.
politics.
Right.
I think you're going to see a lot more of that.
Yeah.
Another way of seeing it is easy times are over, hard times are definitely starting. Hard times probably started a few
Yeah.
years ago,
Yeah.
like before COVID.
Hmm.
It could have even been kicked off by the GFC, which was really showing how fragile the financial system was, and had to implement printing silica kickstart the economy again. Had they not done that, it would have taken far longer for the economy to organically revive itself. And during that period, you had a lot of different kind of disasters and war, and we're very much seeing the same repetition this decade as last decade. And a lot of that has to do with crappy ideologies, scammy politicians that are not for the people, for their own agendas. Um, you're definitely going to see a change, I think, in the next coming years where people actually want change.
Yeah, I think we've gotten to a point where rationality and logic is left far behind, and people view the world in a very certain way, and they refuse to consider, the other side,
Yeah,
or have a
I
rational
agree with that.
conversation. And I think once society gets to that point, it becomes very slippery ground, right? Once you can't have a logical conversation, and we don't want to get I don't want to get too political here, but depending on what news channel you watch, you get a very different view of the world, and
Yeah, you do.
the two views are completely different. It's like almost day and night. And
Polar
so when
opposite.
you when you have that much separation between the two views, and there's no one that's willing to even have a rational conversation, I think it becomes a very difficult situation. And like you said, I think um, I would say the past 5 to 10 years has been kind of going in this direction. And I also think, like,
Yeah.
being a reserve currency, once you start printing money, you're basically a runaway train. I think at some point, you get, it's just
Yeah,
not
if you're
sustainable.
not fixing the fundamental problems for why you had to print, if you're exacerbating it, which they are, especially the US, these freaking huge deficits. The Europeans are the exact same too. They have some serious economic issues to fix, and it's going to take time. I think to be honest, they're more looking at the opposite of inflation, like actual inflation. So we've had like fiscal inflation and more wealth effect kind of things that drove a lot of like the goods inflation, housing inflation, all that in the past 6 years. We're looking at the period of who can actually survive the next 5 years economically. If growth is not sufficient by the end of next year, and shit is not looking so good, not so hot, we're looking at like a worse deflationary period. No one's
Yeah,
talking about
of course not.
that.
We just want to make our money cycle and disappear, right?
Yeah, yeah, that's the thing. Everyone wants to make their money. They all know, like,
Yeah, we know
eventually shit will hit the
what's coming.
fan. So
Yeah,
we're all playing in like this fish tank
yeah,
Ponzi, right? Trying to buy like a nice house or provide for our families and make sure we're fine before shit hits the fan. But
yeah,
eventually reality comes much sooner than you expect.
yeah,
It's
yeah. It's a
something
ticking time.
that
I think
people
it's a
should be
ticking time
aware
bomb.
of.
Yeah, 100%. I think it's a ticking time bomb. But I, with me, like I obviously like to keep up to date with these things, and because the other issue I do see with traders as well is getting so tied up in the macro sentiment and all of these things that it actually impacts their trading. Like I've seen traders get bearish, while speculating on movement in price and comparing it to the macro. Like I don't know if you've seen that, but I've seen people like really let it bleed into their trading as well.
Yeah, yeah, I've seen it. I think every single trader goes through that period
Yeah.
where they learn the macro and they're like, this is bad, this is good. And they expect it to hit the market instantly, like trading news. Part of the conditioning of that is like CPI, PPI, that initially move the market. That's pretty much just algorithms, right? And more like firms trying to target the competition. So it's like a nothing burger move, if you will. The market digesting after these news events is much more important. The change in liquidity, the change in currency pairs, especially against like world reserve currencies, is very important. This is from a macro aspect view of what the market actually thinks, and usually the market to think first, and correctly is the bond market, as in like what the long ends are doing. So that's like 10-year, 20-year, 30-year. Yields trending higher or lower basically dictates the price to value of holding these bonds. You know, um, I think that's like the first thing, and then the second is it takes much longer for those macro um, the macro thesis to really play out, and that would be the recession. Like for
Yeah.
example, me, right? I saw all the signs of slowing economy, things breaking, shit hitting the fan in like August, around about August, September. But because obviously central banks have a significant role in this to do their job, which is stabilizing the financial system, that's what they're going to do, and it has a stimulative effect too. So that prolongs the issue of inflation, fundamentally, as in inflation being more entrenched than driven by consumers and like wealth effect. So it's like fiscal inflation. To like actually timing like a recession trade, which is much longer. It would be like 6 months or something if central banks did not do their job properly, which is providing financial stability. So then the trade window becomes longer than people can stay capitalized for, and that's how they get wrecked.
Right. Yeah, absolutely. And I think the other thing also I've seen is subconsciously people let it bleed into their even short-term bias. They'll get like either too bearish or too bullish, even in the short term.
Right.
Subconsciously kind of bleeds into just watching the news all the time and really like honing in on the macro.
Oh yeah, yeah, the cognitive bias, which
Exactly.
really dictates people's trades. Yeah,
Yeah.
yeah, I think that's a big problem. People should separate, whatever the hell is going on in the vault, and separate that from charts. Like what really matters most when you're trading is your trading system, and your charts. Keep it simple. Keep it very contextual
Yeah.
in the context of what the market's actually doing, than what random crap you read and use, or like whatever. If there's like a unexpected move like COVID or the SVB bank crisis, then obviously you have to be a little bit in turn to digest what's going on, and then also using probably like market data, as in higher level information, is what becomes your like market edge in those situations. So like COVID bottom, right? Spot literally bought the entire time around 6K, whereas like derivatives were like 4K. That tells you the derivatives market was essentially acting way out of line, and the real value was 5K. So it was like, very long. Same with the Silicon Valley Bank. Spot had huge premiums the entire time. They continued buying. And then the reason for that is because, more high level players know that Bitcoin will never really go anywhere. So it's not going to crash or die. And they take advantage of these opportunities. And then the same would be for like the Coinbase coin listing. Yeah, usually when a huge exchange IPOs, it's like peak euphoria, as in like peak of a cycle.
Yes.
It had no value at that time.
Yeah. So the other thing is, I personally know people that their best trade, I mean, they basically just sat on their hands, and their best trade was the USDC DBAG. There's a lot of people that do well. I mean, I guess you need to have capital to take full advantage of those type of situations, but yeah, there's a lot of people that swoop in like once or twice a year, and take full advantage of those type of situations. But
That's true.
one last thing I wanted to talk to you about before we do a pivot is, we had this news come out recently. I think it was yesterday, right? My timeline is completely messed up being in this space. Like I lose track of days sometimes, but the Binance and CZ getting charged and fined, and we saw the reaction in the market and where we are currently today. What's kind of your take on where we're potentially what everything's looking like potentially currently into the end of this year and beginning of next year?
A lot of people are comparing it to BitMEX situation. I don't think it's wrong or right necessarily, but I think it's going to take the market a while to digest how this is going to impact how crypto trades. I don't really think it's going to be like that significant, other than there's going to be more compliance rules on Binance for sure. And this is going to obviously force the other exchanges in the same direction eventually too. Yeah, I don't really know in terms of that. I'm not like a legal person per se. I'm not really informed in that stuff. From trading aspect though, I wouldn't be surprised to see some kind of newer driven trend out of this in the next like week or two. So basically, we're going into a new month, right? December. Monthly open is always very pivotal and usually leads to a trend within the first few days of that. That's pretty much what I'd be looking out for.
All right. Well, we've covered some. I think you've dropped some alpha that a lot of great information. I wanted to pivot a little bit to get to know you a little bit better. Um, what does a typical day look like for you currently? I mean, yeah, the market's been giving us a lot of opportunities, so it might be a little bit different. But let's talk about 2 days. A typical day where we're getting a lot of opportunities, and then a typical day where there's not so many opportunities in the market. And what's your routine as it pertains to trading in general? Like, do you wake up and just have your screen set up? And I know some people, like I personally have a friend who just wakes up and goes straight to the screens. Like I just wake up and
Nah,
go
I
straight
can't
to
do
the
that.
screen.
I have to like I have my own little like routine, which is I get up, obviously check Twitter, see if I miss news or whatever. Then I don't look at charts on my phone. I try not to do that because you kind of need to get your mind in the right mindset, situationally, to trade proficiently and better. I think it's quite important, and half that is right nutrition, so eating well. And yeah, for me, I drink coffee, so I kind of need that to think properly, at least. Yeah, after that, and I take it pretty chilled in the morning. I don't rush myself. And then yeah, eventually get to my PC. I'll check my portfolios, and I'll see, like what things have moved significantly. And then I'll, cross-reference with charts, and I'll see, which orders filled overnight at like significant levels, which I had like leveled out. I have like a Discord server I use, personal one, for documenting all this stuff, which is like, kind of like a mini journal. And then yeah, like after that, I tend to trade a few hours if volatility's there. I get positioned into some stuff if the setups aren't really there. I tend to just kind of keep a brief eye on Bitcoin and a few alts, which potentially look good. And then other than that, I'll focus on like other product projects or research.
Yeah, I mean my routine's pretty similar to yours. I can't wake up and come running to the screens first thing. Like I have a whole ritual, cold shower. A lot of people a lot of people laugh at the cold showers, but it really gets me mentally prepared for the day. I like to work out.
I
I
think
have
it's
a
beneficial, to be honest.
Yeah. No, I think it really mentally prepares me. Just going through that temperature shock, and having to control your breathing. I think it really helps me. I think with trading as well, like it kind of prepares me for the rest of the day. Um, Anything that's thrown my way. But the other thing I wanted to ask you along the same lines is when do you take breaks or how do you reset? Like when you're in a drawdown, like how do you manage that? How do you manage stress in general?
I'm very straightforward when it comes to drawdowns. I like it minimal. That's about it. So if I know the trade is going against me, I will just simply close off the trade initially. And if I see like the market's picking up against me, I close the entire thing. It really depends on the context. So if it's like a CPI day, I have a strategy for playing that. Like the usual standard deviation move is like 2% on Bitcoin, like at most, right? And then obviously you take the other side, which is the bigger move. That's like one way to look at it. Generally for like stress, the only time I have stress is when I take on huge size, which I don't usually take, and that's like early trends. And I know there's like 20 to 30% odds the market can do something scammy as shit before it actually trends, and that's usually what will keep me more focused on the market at that time. Other than that, though, I tend to separate my emotions completely from the market.
Yeah. Have you ever been in a situation where you've had like, people will have like a series of trades that don't work in their favor. Or the opposite is also true where you'll have like a winning streak and some people tend to just walk away because they know once they have a winning streak, it's going to lead to them thinking of profits as something to gamble with and take on more risk. Do you deal with any of that, or you just basically you're pretty much you don't really deal with that kind of stuff in terms of emotions
No,
when it comes to
yeah,
trading?
I definitely do. So when it comes to alts and you make ridiculous gains in some days, like alts ripping 40%, it's like well above the average return. First of all, obviously, if you were like long and you're making a lot, right, take profits. Don't hold the bag. Um, then yeah, I think the next few days are very important for the overall trend, right? So if like the market stalls out, Bitcoin looks like shit, you clear your book basically, and then you take a few days off. Don't like overtrade. don't overcomplicate it too. As a trader, you're basically here for two principles. That's minimal drawdown, maximize your return.
Yeah, absolutely. And I think as a beginner, that's also, I mean, not even just as a beginner, but as a beginner, especially um, when you're putting in the time and learning the art or the science of trading, I think it's essential that you protect yourself from, I mean, you're going to pay tuition, but you want to keep that tuition to a minimum and survive long enough to get to a point where you can be consistently profitable. The other thing I wanted to ask you was, do you have any other hobbies aside from trading? We've talked a lot of trading for the past hour and 40 minutes.
That's almost like 2 hours now.
I
Hobby
didn't realize how
wise,
fast the time passed, but yeah. Any other hobbies besides trading?
honestly, all my hobbies are usually work based. That's kind of thing. I'm like a workaholic.
Yeah, I'm the
So I
same as
tend
you.
to, yeah, like when I'm not trading, I'd be researching something, learning more complicated forms of or approaches of programming. And then I'd be working on like at home projects where I can make like better trading tools and stuff. I've done that for like a year now in between the bear market. Um, I want to probably get out more, to be honest, and do like more like bush walking, hikes,
Yeah.
maybe like rock climbing or something. I think getting outdoors is very important for your mental health generally. Because, constantly trading for quite a while, not getting out enough, definitely impacts you mentally. So it'll eventually show up in your decision making, as well as like how you correspond with people. That goes into the point of exhaustion and burning out. It's like, not ignoring the telltale signs of being burnt out.
Yeah. So me and you are similar in that sense. Is I'm a workaholic as well, and I do struggle with. I really push myself sometimes, but I do know where my boundaries are when it comes to trading. Like I'll step away from trading, but then my issues, even after I step away from trading, I need to be doing something that's going to be progressing, benefiting me in a productive manner. And I like to think of it as active rest, right? But aside from that, I do work out and try to make time for my health and make sure that that's in order, not to rug my sleep too consistently. Sleep is pretty
Yeah,
important.
sleep is a big thing. I think like
Yeah,
everyone consistently
100%.
fucks that one up.
Yeah. I was on your case for a while about the sleep thing, but the problem is your time zone's so messed up that, it's just like, yeah, for certain opportunities, it's difficult.
Yeah. Yeah, it's kind of awkward if you're living in Oceania and you want to trade. Usually, to be honest, Asia sessions like shit
Yeah.
statistically.
Yeah.
Only time it's good is like a bull market. That's about it.
Right.
So most of the big moves are around like 1 to 3 a.m. my time. So that's already late enough to completely wreck
Yeah, it's a
your
rug.
sleep. Because if
It's a
you're in a
rug.
trade at 3 a.m.,
Yeah.
you're going to be in that trade till 6 a.m. till
Yep.
close.
Yep. Yeah, definitely. I
So
mean, there's a thing to circadian rhythm, but obviously, there's always a trade off. You need to give something up sometimes to get something. And, that's obviously discretionary and at the discretion of the individual who wants to. It's at your discretion, right? What you're willing to give up to get what you want. But one last thing I wanted to ask you before we start wrapping it up is, we all have our stories. There's funny stories, interesting stories from the time we started trading or we got into crypto. Do you remember any? It could be something like an inspirational moment, a funny or interesting moment for you over the years as you've been in this space.
well, I mean, I have one kind of funny story. So one of the reasons why I got into derivatives trading specifically was because of BitLord, because I saw something of like his on Twitter at the time. That's literally why I started trading on
That's
BitMEX.
insane.
So I think that's kind of funny.
That
Considering
is
he's,
pretty
he's a
funny.
complete degenerate.
That's hilarious. That is pretty funny. I wonder what the tweet was
That's
or
it's
what you
funny.
saw exactly. What you saw exactly to
Um,
attracted you towards it.
I like kind of competitive things, like
Yeah.
competitive games, for example, right? And he was doing like trade competitions at the time.
Oh,
So
okay. I
he would
see.
run like a pool of like trading competitions in like his Discord at the time or something like that. And you needed like a certain amount to enter. And obviously, I don't know what the hell like referral stuff was at the time. So obviously, it was designed for him to like milk ref fees. That's why he didn't trade in it. I did. I didn't win any of them. I don't think since new trader, right? But yeah, I consistently enjoyed that, being able to see how well your strategies can perform in specific environments of the market, which is more or less like what backtesting is.
Yeah, 100%. I mean, that makes sense. Now that makes sense. Why that? So it's not degenerate as I thought it was going to be. I mean, it makes sense. You saw the tweet for trading competition and it kind of attracted you to shoot your shot.
Yeah, dude, he was the biggest like XRP maxi when it was like 10 cents.
Yeah, I remember that.
Yeah, I remember
Oh,
the
man.
XRP ban. I remember buying that. That was stupid. Different times. The cycle's very different to the previous.
Yeah. Yeah, I wonder.
And yeah, that's the same for like the 2016 2018 period. There
Yeah.
hasn't been an era like that since. They every single cycle is like different.
Yeah, it's different.
Like crazy in forms of like a new sector.
Yeah. Yeah. And I think what I want to get into here and start wrapping it up is there's people that are, this is going to be their first cycle, or this might be they're listening in and they just started trading, or they're kind of in the middle of their journey. What advice would you give someone who's just started trading or is in the beginning phase of their trading journey?
If I assume that they're trading crypto, if they are, right, I would say you
Yeah,
gotta
let's assume they're trading
learn.
crypto.
Yeah. Because trading equities is easier than crypto tenfold, right?
Right,
Much
absolutely.
easier. That's because various reasons. I won't go there today, but if you're trading crypto and you're starting off early, I would say learn what leverage is and learn how to not be stupid with it. That means using 100x leverage initially. You shouldn't do that. Keep leverage very low. And also learn the difference between like cross and the other form of margin, which is isolated. So that position, if it goes against you, doesn't draw down your entire balance. I think people who are learning to trade should use that only, so they don't draw down their entire balance. Other than that, I think they need to learn some of the core trading principles. A good guy for that would be Trader Dante, for sure, or CBS, or CryptoCred, Donald. They're all very, very good at the underlying and foundational aspects of trading. I think it's pretty simple as that, like learning the structure, learning price action, different, well, very basic like momentum indicators and how to use it. Keep it quite simple. You don't have to overload yourself.
Yeah, I agree with that 100%. I think those are great points, and I think basically not treat it as a casino, right? I mean, put in the time, learn things. Like people don't know what the difference. There's people who've been trading for a while that still don't know the difference between isolated and cross, which is surprising to me. They still don't know why price moves. They still don't know what a maker and a taker is. Obviously, they're not going to survive for too long going in that direction. But some people get lucky. They'll run up an account. I've had people reach out to me that have run up accounts from $1,000 to 30, 40 grand and then run it all the way back down. Right. So I think you mentioned some great points here is learn the fundamentals, keep it simple, identify an edge or something that's going to be repeatable and that's going to be profitable in a consistent manner, and then just take it from there.
Yeah, 100%. I think the market dynamic is important too. So when you run up an account a lot, you want to consider the risk you've been taking, and if you could still do that, as well as if, I would say like a little back testing period would be pretty smart or wise to check that the trading strategy still works. Because a lot of people stick to strategies that become more and more like less profitable. That's how they blow up accounts.
Yeah.
The other point would be, using the same amount of leverage when the market is going the other way against you. That's a very quick way to get yourself wrecked.
Yeah, I think that's a good quality to have, to understand what your invalidation is and quickly flip. I think instead of like sticking to
don't hold a losing bag.
Yeah, exactly. And
there's literally nothing wrong with cutting a position early that's going against you. You can always get back in at a better opportunity.
Yeah. And I think one of the most important things that I've found is like you need to learn how to be wrong in the right way. You know what I mean? Like
accepting you're wrong is important.
Yeah, exactly. I
think it has nothing to do with your ego or pride. It's just 100%. Simply like binary. It's 1 or 0. 1 being right, 0 being wrong. If it's 0, cut the trade.
Yeah, 100%. So I think we've covered a wide variety of subjects, and I think anyone listening in will definitely take away something beneficial. But if there's anything else that you want to add in terms of, information that you might think might be useful for anyone listening in, any other hints, especially in this market, now that we're sort of changing regimes?
I think for me, honestly, just keep it kind of simple. Yeah. Structure, trend, that's right. Basically all that matters. Yeah, if we go to 48K, consider it something like the local top in 2019, potentially. Really the way I trade is like horizontal. I can show you, literally. Yeah, so these are like 4-hour levels I've just been watching. This obviously supply.
Right.
This has been the demand.
Yeah.
Yeah, what I'll do is just remove these for now. I always like more of a higher time frame view of the market before I take like lower time frame trades. Just so I know the more direct context of like trend. It's like, the example here is you have high, you break significant resistance, right? We haven't retested it here. It's doing like the same like vertical shit it usually does, like here and here. If you get, the drop, it's bid. If you get the bot, you sell. It's like, like here, technically, if like bots here, you sell.
Yeah.
It's simple.
Yeah.
But generally, as I was saying, is you have like these different ranges. So, like you had the 2021 range here, right? We're technically back in that range, right? So we can expect over the higher time frame to trade between like 31 and 57K, right? So like, all the spot you acquired here should be in cold storage. Yeah, and I think, obviously if you break below here again, that's going to be a major shift, right?
Yeah, that would be bad.
So then you would be back in the old range. Yeah.
That would not look too pretty. That would be pretty bad.
No, it wouldn't. But even from like 2019, you had a very similar range, right? So you
Right.
had like it obviously traded very differently.
Right.
So this was basically the main range. So you had deviation, but you had like a huge, almost like a developing value range for ages. Yeah, I'll just do it from like here. It's like when we actually broke out strongly, it's like, it's 534 days. It's a long time, right? And if we assume this cycle is kind of different because you have like, this own kind of
Right. Yeah. Yeah. Yeah.
range different to 2018 for sure. It's like, similar 531 days, 534. It's like very similar.
Interesting. Yeah, I think I remember looking at this a
And
little
we
bit.
obviously broke out of that. And then obviously this range itself was 471. It's like the point here really is the duration of time, and that comes into the context of long-term trade plans, like holding Bitcoin from here, like 16K, right? It actually took I'll do it from the very, I'd say about here. So 246 days to make 100%. And a lot of people would think, you can do that in like 30 days. The only time you can
Yeah.
do that in 30 days is
Is in
here.
that regime. Yeah. Exactly.
Yes. And that only happens every 3 or 4 years.
Exactly.
Yeah, anyway.
Yeah. So,
Time
but yeah, no, I
duration.
think this is really useful for anyone watching and listening in. Is to keep things simple, start from a higher time frame, and then if you want to zoom in, like I always, sometimes I'll go back to like a monthly, go weekly, daily, 3 days, and then work my way all the way back, just to keep things in perspective. Because I think sometimes when you get caught up in the lower time frames, it
Yeah,
kind of
it can get
throws
noisy.
things off. Yeah.
Sometimes I use the 12-hour when 4 hour is
Yeah, I
like
like the 12
really
hours as well.
retarded.
No, I like
I
the
hope you
12
don't get
hour.
banned for that one.
I
By the
like the
way,
12 hour. I like 12. I like 3, and I like 3 days as well. I like those time frames.
yeah, I mean, three day can be pretty useful.
Yeah, I like 3.
Like literally, price has not moved. It's just the
Yep,
same
same thing.
range.
Yeah.
I mean, to be
Okay.
honest with this, you'd probably expect like somewhere.
I was expecting a sweep of those highs earlier today, but yeah.
Nope. I mean, this dude was probably pushing it up.
Yeah, yeah.
He's been filling bids constantly, so maybe later if
Yeah, maybe
that buy
later.
is legit.
Let's see what happens.
Yep.
Okay, so we've covered that. So yeah, here we're about to wrap up this conversation. We're coming towards the end of it, but are there any Twitter account recommendations? Smaller, maybe some smaller accounts, and also any accounts that you would recommend in general, and also if there's any books that you recommend for people that are listening.
Off the top of my head, I mean, I'm not great at like remembering that stuff, but I can give you a list for the description if you want.
Okay, yeah, definitely. Yeah, you can send
All right,
over
so
a list.
look in the description for that one.
Yeah, definitely. Or I can even maybe we'll throw it up on the screen. Also, anything that you want to plug.
Anything that I want to what?
Anything that you want to plug. I mean, anyone listening in, don't know your Twitter, but 52kskew. But if there's anything else that you want to mention or plug in.
No, I think that's probably enough. It's definitely a very in-depth conversation.
Yeah. No, we covered a lot of different things, and I want to thank you for your time. And we've been talking about having this conversation for a while. And yeah, I thank you for the time that you took to have this conversation with me.
It was a pleasure, bro.
Yeah, it was
Anytime.
great. It was great. And before we conclude, I usually like to conclude these with like a quote from a Stoic, or a quote that I like. And so there's a quote by Viktor Frankl, and this is a phenomenal book. It's called Man's Search for Meaning. And anyone that's listening right now, I'd highly urge you read that book if you ever get the time. But the quote is, when we are no longer able to change a situation, we are challenged to change ourselves. This idea links back to Epictetus's dichotomy of control. There are many things around us that we have the ability to change. However, there are more things that are outside of our realm of influence typically. And when we find that you've done everything that you can to influence your situation, but you still feel like you're suffering, it's important to look within. And so we have the ability to lessen the suffering by simply changing how we perceive our situation. So a couple of questions that you can ask yourself is, how can you find anything positive in the current situation you're in? Are there any opportunities for growth? Is this hardship going to make you more resilient in the future? And is there anything that you can learn from it? So that's my 2 cents. I usually like to end these with like a quote. Thank you for tuning in. Hope this conversation was as enjoyable for you to listen as it was for me to have with my friend Skew. Until next time, thank you.
Peace.